This is so wild. Accuracy on another level. $2.42 to the absolute T of a degree on XRP. An analysis that we had put out to you guys well in advance, a day before when XRP was trading at about $2.80, called out utilizing institutional insights just to show you guys the level of accuracy that we are operating with, that you all can operate with as well in 2025 and heading into 2026. Just in billions of dollars wiped from the crypto market, trillions of dollars wiped from the stock market today. Find out what's going on in today's video breakdown. Welcome back to another CYPRX video, everybody. As always, bringing you guys some of the realest information in the game. You can see right now what is trending on Twitter. Massive market turmoil today. Stock market shedding over $1.6 trillion. And the total cryptocurrency market shedding over $100 billion in just a few minutes after massive ongoing geopolitical fundamental headlines struck the news outlets this rising. So we're going to dive into this in today's video breakdown. But before we jump into this one, I want to shift your mindset and your attention over here, because to me, as a profitable trader and seven-figure investor, I want to really encourage people to start to shift the content that they consume. So just to show you guys exactly what I'm talking about, how manipulated the algorithm is right now in today's day and age, okay? And this has nothing to do or against with the influencer whom I'm posting this post on, because I don't know this person. I'm just specifically talking about the algorithm and how it is up to you guys who feed the algorithm to shift what the algorithm feeds you, because we know that algorithms control our lives.
These are the issues of our day. Think about your own lives. What you read, what you know, what you watch, what you buy, everything is increasingly determined by algorithms. Our lives are being taken over by so as a society.
And so it is up to you guys in order to change that algorithm. What is being fed to you? What content are you digesting? And how do you perform in the financial markets has a lot to do with the information that you're digesting. So I said here, it's crazy how a simple "why is everything dumping" tweet can rack up 90,000 plus impressions, while a detailed breakdown of the exact macro geopolitical events driving today's crypto pullback barely hits 1,000 impressions. This is exactly why most retail investors stay stuck reacting instead of preparing. The algorithm rewards entertainment, not education and depth. Today's broad crypto sell-off is a textbook example of heavy risk correlation. Political turmoil in France rattled Eurozone investors' confidence, hawkish Fed commentary reignited inflation concerns, and global tariff uncertainty pushed investors out of risk assets. Crypto followed equities lower. This is how real capital flow works. And if you want to thrive in this space long term, it would behoove you all to learn fundamentals. So here you can see this individual's post. Again, I don't know this individual. I'm not bashing this person by any means, but you definitely don't want to be this guy if this is a serious post, where he posted, "Why is everything dumping?" Absolutely confused, has no idea what's going on. And again, this dude might be joking, but still, you don't want to be on the side of the retail crowd that is uneducated and misinformed. This has 110,000 views, and you can see that this is posted at 10:33 a.m. Well, if we come over here to my post, you can actually see that the post here, if we go back to my profile, where I had posted a full and entire breakdown on what's going on in the total cryptocurrency market, what's happening, why were the markets pulling back, why were the markets dumping, you can see that my post was posted shortly after this individual's post at 11:37 a.m. and still only has 1,700 views. It's so insane to me how the algorithm favors entertainment over thorough breakdown analysis of the financial markets to educate the masses on what is happening. So let's dive in. Let's jump into some historical context. Going back just a couple of days ago in the private CYPRX community, what were we talking about and what were we warning you all on publicly? Well, if you come back over here, this is our October 5th private CYPRX report, albeit we have been making these reports publicly available to you all if you are subscribed to our YouTube. Occasionally, I'll go through, I'll make fundamental video updates for you all, and I'll read our private community reports. Here you guys can see we made this October 5th private community report that we sent out to our members, available to you guys publicly just 3 days ago. And if you come over here, you can see that we were reading on the CYPRX YouTube, this XRP XLM Will the Bull Run Continue post. We were reading this specific post. And if you scroll right down here to the bottom, what were we warning our community of? Well, right down here at the bottom, it says, markets are currently priced for a dovish perfection, peaceful geopolitical development, continued Fed easing, and a non-hawkish Bank of Japan. As long as ceasefires progress, Fed communication remains supportive of rate cuts, and Japan doesn't unexpectedly tighten, risk assets, especially crypto, could continue rallying. But these are fragile pillars. Any shift in the tone from the Fed, any stronger US data that pushes back on rate cut expectations and strengthens the dollar, any breakdown in Gaza negotiations, or any global negative headlines around tariffs, or a surprise from the Bank of Japan could quickly flip the sentiment from risk on to risk off, making this a critical week to monitor macro and geopolitical catalysts closely. So we had warned our private CYPRX community in advance that this current pullback that we're living through was a possibility. Now, to dig a little bit deeper and show you guys even better examples, this was a community podcast that we did for our private group on October 6th. Timestamps are extremely important to us here in the CYPRX community. And I want you guys to listen to what we were saying days ago before the market corrected, when we were operating at an institutional delta zone at the $4.24 trillion level. Now, we are the only community in the retail spectrum with access to this type of data via our institutional software. And so if at any point in time you guys are interested in accessing this software, you guys can always head over to cyprxtrading.com and you can lock in with us in the private CYPRX Discord, gaining access to these delta zones. Now, fast forward to October 10th, you can see how accurate this information is. How did we know that at $4.24 trillion, if we were to see buyers trapped at highs, we were to see a shift in market sentiment, that we would likely see a pullback? We predicted this on October 6th. Take a second and listen. So any renewed escalation that brings back the geopolitical risk premium. And if we see any prolonged US government shutdown or any type of data releases that create any type of uncertainty or spark investor, or dampen investor confidence, that push back on this rate cut narrative, while at the same time we see buyers trapping or sellers trapping buyers and becoming aggressive, pushing price back below the delta, then we know the likelihood is not that we're going to break higher into new territory to respect a sell delta, but instead we're likely to start making our way back down in the form of a pullback to see if buyers can then come and defend at the buy delta. So if we see this type of rhetoric this week and the market sentiment does not continue risk off, we're likely to see buyers make an attempt to push higher, sellers trap those buyers, push back below the delta, make a lower high underneath of it, and then start to see sellers become aggressive. Now, word for word, what we were sharing in that particular video breakdown on October 6th, at the same time, what we were sharing for you guys publicly on October 5th in our reports that we read for you guys on YouTube, is exactly what is playing out now. You can see that buyers failed to break above the $4.24 to $4.23 trillion institutional delta, just like we said in that Zoom call privately that we had with the community. And what did we see? We saw buyers trapped at highs. We saw a lower high made, buyers getting trapped at highs again, and sellers with volume pushing price action down into our overall first bearish target of around $3.67 trillion, or at least a discount where previous buyers were entering into the market aggressively. And that is exactly what is being reflected in today's price. So ask yourself the question, wouldn't you rather be a part of a community that understands these macro dynamics coupled with institutional technical analysis insights, or would you rather be a part of the crowd that is completely confused, that is misinformed, that has no idea what's going on? Now is the time to further your education. Maybe it's because I'm passionate about the financial markets in which I involve myself in, but it hurts my heart to see people confused as to why their portfolio right now might not be performing well, because this type of price action can manipulate, and most likely will manipulate, a lot of people, and that the bull run is over. But that is the farthest thing from the truth. These pullbacks happen. Back in 2024, rolling into 2025, this was a perfect example. you can see this was the December shift in tone from the Federal Reserve. We have gone over this in previous Zoom call breakdowns, where on December 18th, here at this high, Jerome Powell completely shifted the market sentiment with one comment, pushing back on the trajectory of rate cuts that were set to be delivered in 2025. This created a substantial market pullback and retracement that lasted a few months, but eventually the market found a floor, gathered up enough buy momentum and open interest to take price action higher. That is exactly the environment coming up into 2026 that I feel we are headed into that people need to prepare for. These fundamentally driven pullbacks need to be understood so that way you guys can take advantage of them if you are interested at selling when these events take place to reallocate capital, or at least at a minimum, so that way you understand why the market's discounted. That way you're not making fear-based investment decisions. Now, before we get into the total cryptocurrency market, I want to just briefly go over the XRP analysis that we gave you guys utilizing institutional order flow metrics. We are the only community in the retail space with access to this information via our in-house algorithms that our institutional scalper has developed. Now, over on X, before we get into the analysis, we put this out to you guys way before the current sell-off. If we go take a look at when we posted this, where XRP's price was trading was at $2.80. And in the bearish scenario, we had said to you guys here, on the flip side, if buyers fail to clear $2.82 and sellers manage to trap them at highs, we could see a shift back into distribution. A pullback towards $2.76 will be the first sign of weakness. A clean break below $2.76 that buyers fail to defend could open the door for a deeper downside target of $2.56 to $2.42, where the next buy deltas reside. Okay, and so this was again posted to you guys a day in advance utilizing institutional software. No hopium, no hype, no outrageous price targets or price trajectories. Here was our analysis. And if we head over to the charts, you guys can actively see that that analysis that we had delivered to you guys projecting that we would see a dip down on XRP into 256 to 242 is exactly what is playing out now. So the question is, where could price go if we break $2.42? The next institutional level that we have on our radar is $2.26. If buyers cannot show their hand at $2.42, that's going to open the door for a full-on retracement of the July move and head us back down into $2.26, possibly even lower. So let's, as a community, if you're following us here at CYPRX, read our updated October 10th fundamental report so you guys understand, just like our private community understands what's happening in the markets today, so we can mentally prepare. Yesterday, we highlighted how global sentiment had started to crack, and that weakness, by the way, saying yesterday is what we mentioned to our private community in yesterday's October 9th report. Yesterday, we highlighted how global sentiment had started to crack and that weakness intensified today, pushing the total crypto market cap toward the first bearish target of around $3.6 trillion. This marks the first decisive break below the $4 trillion threshold since October 1st, when the market briefly poked above it. A confluence of political instability in Europe and U.S. hawkishness, Federal Reserve commentary, and escalating tariff tensions between the U.S. and China created a risk-off environment that rippled through financial markets, with crypto bearing a significant share of the sell-off. So first, we had France's political shakeup rattling European sentiment. The euro came under sustained selling pressure. Remember that the euro is also seen in the fiat market realm and FX as a risk currency, paired against the United States dollar, a safe haven currency. The euro came under sustained selling pressure earlier in the week after French Prime Minister Sebastian, I'm not going to butcher his last name, abruptly resigned, just hours after unveiling his cabinet. His tenure now stands as one of the shortest in modern French history. This sudden exit sent shockwaves through political circles and deepened concerns over governmental deadlock within the Eurozone's second largest economy. President Emmanuel Macron now faces mounting pressure to appoint a new prime minister by Friday evening, with the looming year-end budget deadline adding urgency. While snap elections are not the base case at the moment, they remain a last resort option. If coalition fails, the political uncertainty in France has injected another layer of volatility into European assets, weighing on both euro and regional equities. And you can see that here in the rhetoric from our financial reports that we read in this community. It says right here, the abrupt resignation rattled investor confidence. When we see headlines like that, that is not good for positive risk sentiment. Second, we saw the US government shutdown continuing to drag on, putting economic data pending in limbo. Meanwhile, across the Atlantic, attention remains fixed on the ongoing US government shutdown, which has now entered into its 10th day with no resolution currently in sight. The Senate is not expected to hold another vote until Tuesday next week, prolonging the gridlock and raising concerns about economic fallout if the impasse extends into mid October. The shutdown has already delayed the release of the September non-farm payrolls report, and if it persists into next week, the Consumer Price Index, or CPI, scheduled for Wednesday, could also be disrupted. Bloomberg reported that the Bureau of Labor Statistics has recalled some staff to complete the CPI dataset, suggesting that the report will likely still be released before the Fed's October 29th to 30th policy meeting. Nevertheless, uncertainty around key data releases is creating a vacuum for traders, where sentiment can swing sharply on headlines alone. I won't bore you guys to death with the mixed US data, but we also had tariff escalations between the US and China raise the stakes. Now, these were the broadest headlines from today's risk off environment. Adding to the risk off tone were escalating trade tensions between Washington and Beijing. On Friday, President Donald Trump stated that there was no reason to meet with China's President Xi Jinping in South Korea as planned. And he also revealed that the US is calculating a massive increase in tariffs on Chinese imports. Now, this was a beautiful infographic by Kobizi Letter, hopefully I'm pronouncing that correctly, on when they showed the timing of all of these events in the S&P 500. This is just to show that these fundamentals actually matter. And it would behoove you guys, again, to pay close attention. Join a like-minded community that goes over these things on a day-to-day basis with valid screenshots, open documents, Zoom calls, so that way you can thoroughly ask questions and understand the current market environment. So by the end of day, these overlapping narratives, including the hawkishness from Fed speakers that I failed to mention just a second ago, that we had as well today, these overlapping narratives, European political instability, US fiscal uncertainty, tariff escalation, mixed consumer data, and Fed caution created a perfect storm of uncertainty for risk assets. The total crypto market shed over $100 billion, turning decisively red. The break below $4 trillion is technically significant. It signals a loss of short-term momentum and raises the risk of a deeper correction phase if conditions continue to deteriorate. Should political instability deepen, inflation prints surprise to the upside, or the shutdown drag on, the market could easily extend losses beyond $3.6 trillion, opening the door to more pronounced risk aversion. The current environment is currently defined by compounding uncertainties, not a single trigger. With political volatility in Europe, fiscal gridlock in the US, tariff battles heating up, and central bankers signaling caution, investor confidence is fragile. Unless upcoming inflation data surprises to the downside or geopolitical tensions ease, risk markets, including crypto, could remain under heavy pressure in the near term. So just real fast, taking a look at the total cryptocurrency market, we are headed down into our first institutional buy delta at $3.67 trillion. I want you guys to really understand that if the market sentiment deteriorates further, meaning we see further escalations or net new tariff headlines or shocks in the market, especially over the weekend, new geopolitical tensions escalate, meaning ceasefire talks in the Middle East or between Russia and Ukraine start to diminish and weigh on investor sentiment, driving more demand for safe haven currencies. Or in the most shocking environment, next week, we see higher inflation data leaning into a more hawkish Fed rhetoric, pushing back on what has been previously priced into the market that the Fed is going to be able to cut rates aggressively October, December, and heading into 2026, then we are likely to see this retracement stem into much deeper territory. Our next institutional buy deltas don't come in until 3.28 and $3.14 trillion beneath 3.67. So if we were to see a break below the $3.67 trillion threshold, that's most likely going to open the door for a revisitation of those July lows around 3.2 to $3.1 trillion. So that is the complete analysis. Hopefully you guys enjoyed today's video breakdown. Again, just trying to show you all that we are one of the realest communities in the game with the most accurate analysis. There are still people on the internet right now that exist that have been telling you guys that XRP is going to go to $1,000. Oh my gosh, buy in now, this, and that. All of that is a distraction. Pay attention to education. Pay attention to understanding fundamental analytics and institutional insights in terms of technical analysis, and you can't go wrong. You will mature so much more in your investing and trading career if you pay attention to the insights, some of which we deliver inside the private CYPRX community. As always, I encourage you guys to tap in with us. Head over to CYPRXtrading.com, join the private CYPRX Discord, utilize our platform as an educational foundation to really build your understanding of how these financial markets work. As always, be cognizant, be aware out there, and I will see you all in the next video breakdown.